Let me start by introducing my friend Patrick Campos of Securrency, who's going to be the moderator of our first panel. And the title of the panel is The Mainstreaming of Crypto Assets, which is one of the central themes of our program today. So Patrick, would you like to first introduce yourself and then introduce your panel?
Absolutely. Thanks, Howard. And, we've got a lot of ground to cover here. I know we're a little bit behind schedule. So if I can, Nick, if you could just give me the signal as we're hitting the end line here. But yeah, first of all, greetings to everyone. Look, it's an honor really to have the opportunity to lead this discussion. We've got a really, really distinguished, high-powered, and frankly, brilliant group of thought leaders in the crypto and digital asset space represented on this panel. I want to take a moment to thank Howard and Nick for making this event possible and for assembling such a strong cast of characters. I will say that I have fond memories of presenting a couple of years back at Howard's idyllic estate there in Bonny, Doon back in the pre-COVIDian period. So I'm sure the return to the Redwoods in the near future will be legendary. By way of introduction, as Howard said, my name is Patrick Campos and I serve as a Chief Strategy Officer for Securrency. Securrency is a blockchain-based financial markets infrastructure company. We've, over the course of the past 5 years, built powerful compliance-focused middleware that rides above the protocol layer and enables a compliant movement of value across different distributed ledgers and legacy systems. In this sense, we built the interoperable compliance and transactional rails across which we believe that all future value will move in a decentralized and interconnected world. So again, it's a great honor to be in the company here of such a tremendous panel of visionaries. I'm getting word that not all of my panelists are here, so I'll introduce them now, and then we'll figure out who's not here. But for the moment, let me go ahead and without further ado, begin with the introductions. So first, joining us is Maxime de Guillebon. Maxime is the CEO of Zodia, which is an institutional-grade digital assets custodian that was created as a joint venture between Standard Chartered Bank and Northern Trust. Maxime previously spent 14 years at Standard Chartered Bank, 2 of which were spent with SC Ventures in Singapore. And prior to SC Ventures, Maxime was the head of digital platforms for the bank. Next is Ria Bhutoria. Ria has an extensive background in digital finance and almost needs no introduction, but I'll do so anyway. Before her current role as Director of Research at Fidelity Digital Assets, Ria was a senior analyst at Circle Research, which is a part of digital payments giant Circle. Prior to that, Ria worked as an equity research analyst at Credit Suisse. Her work has given her a prominent status in the Bitcoin industry, as Fidelity was one of the first asset managers to openly embrace Bitcoin. Next up is Will Peck. Will is the head of strategy and emerging technologies at Wisdomtree. In his role there, Will guides the firm's strategy, leads corporate development, and drives other strategic initiatives for Wisdomtree. Additionally, he's responsible for oversight of the firm's investments in emerging technologies. Previously, Will worked in investment banking for Bank of America Merrill Lynch, covering financial institutions, including asset management and insurance companies. And finally, although I hope that she's on now, I'm not quite sure, but Meltem Demirors. Meltem is the Chief Strategy Officer of CoinShares, which, as many of you know, is an investment firm that manages billions of dollars in assets on behalf of a global investor base, and is a trusted partner to investors and entrepreneurs navigating the digital asset ecosystem. Meltem oversees the firm's managed strategies group and its New York office, and she leads corporate development. Previously, Meltem was part of the founding team of Digital Currency Group. As a veteran investor in the digital currency space, she has invested in over 250 companies in the ecosystem. Meltem is passionate about education and advocacy, and she teaches the Oxford Blockchain Strategy Program and co-chairs the World Economic Forum Cryptocurrency Council. So, as you can see, quite a distinguished group here. We're ready to get started, but first, let me do kind of a roll call here to make sure that we've got everyone, all of our panelists, here in the room. So I see Maxime and Ria, and Will. Meltem, are you on?
I'm here.
Excellent. Okay. All right. So great. Well, with that, let's go ahead and get started. So the topic for this panel is, of course, the mainstreaming of crypto assets. As we say that, there's a definitional or even a philosophical question to be raised about the word mainstream. But before we dig into that, I think it'll be useful for our audience to learn a bit more about what each of you is doing in the crypto and the digital asset space. So Ria, if you don't mind, I'm going to begin with you. You're one of the most respected voices in this space, and you've been able to deliver strong and almost maverick messages to the market with the authority of a true intellectual. I should also note that you were recently named to Cointelegraph's list of the top 100 notable people in blockchain for 2021, coming in at a very impressive number 18. So congratulations for that. You, of course, play a prominent role in Fidelity's digital asset strategy, which has been incredibly forward-leaning. Can you tell us a bit more about your focus for the upcoming year?
Yeah, sure. Thank you so much for the introduction, Patrick. And it's great to be here today and talk to you a little bit about, Fidelity Digital Assets, what I'm doing at Fidelity Digital Assets from a research perspective, and how we're seeing the market evolving. So from a research perspective, we're going to continue to build upon the work that we've done on Bitcoin market infrastructure and maturation, institutional adoption, and investment theses, and help institutional investors really understand the trade-offs between the different channels of exposure that are growing every day, given significant product development over the last year, and also help them understand, as they make their initial investment into Bitcoin, which is kind of like the gateway drug to the crypto asset ecosystem, what are the differences between Bitcoin and other digital assets and the investment opportunities beyond Bitcoin. From a Fidelity Digital Assets perspective, in many ways, it feels like the team was built for this moment of consistent demand and institutional adoption. So we offer, custody and trade execution today. And an area that we'll continue to focus on is enhancing the integration of custody and liquidity and providing a more unified settlement capability for institutions that don't want to pre-fund exchanges or open up multiple accounts and are seeking to achieve greater efficiency of their capital. Another area that we'll focus on is around enabling other custodians in traditional markets to offer digital asset services. With the technology that we've been researching and building for more than half a decade now. Given the OCC's recent guidance and the uptick in adoption of Bitcoin by banks and other traditional financial services companies, we're planning on continuing to make our custody platform more accessible to these institutions so that they can make Bitcoin and other digital assets available to their clients in a sub-custody model with us.
Great, thanks, Ria. I appreciate that. Let me turn now to Meltem. I just used the word maverick to describe some of Ria's statements, but for anyone who knows you, obviously your career and remarkable influence on the market, really embody that word. Given your myriad activities in the space, it's probably a disservice to the audience to try to pin you down on one thing. But just in the interest of time, let's go ahead and focus on CoinShares. So, what's on tap for you in 2021?
Sure. So CoinShares, we've been in the market since 2015 when we launched our first exchange traded product. We currently have 4.5 billion in assets under management across our 2 ETP platforms. We have an active capital markets business, and on the trading side, a lot of what we're doing mirrors what Ria articulated. We provide liquidity to a number of both institutional and crypto native financial firms. And then on the investing side, we continue to invest in firms that are really bridging the gap between the space I come from, which is traditional finance, corporate treasury, the banking space, and the crypto native space. Really, in a very short summary, if I could say what CoinShares is all about and what we're focused on, is we believe that we're going to see the construction of new types of financial institutions being built in new ways, new financial products and services being built and delivered and distributed in new ways. And we're already seeing that today. If we look at the massive numbers going through decentralized exchanges, going through on-chain indices and other product constructions, we believe this is just the beginning. Obviously, there's a lot of work to do there to make that mesh with the world that we all come from, but we're certainly of the mind that our role at CoinShares is to play, the part of helping make that transition possible. And I certainly believe that over the next 2 to 5 years, we'll see the migration of trillions of dollars in assets, of collateralization, of securitization, of leverage from the TradFi space into the crypto native finance space. And as a result, I think we'll see a tremendous amount of activity, not only from legacy banks and financial institutions, but crypto firms like ours will become institutions in their own right, which is something we're already seeing with all of the IPOs coming to market over the next year and that have already gone out so far in the last 12 months.
Well, that was a heck of a spoiler there, Miss Laser Eyes. So, okay, well, let's go ahead and turn now to Maxime. You announced recently the partnership between Standard Chartered Bank and Northern Trust to launch Zodia in December, and I think, if I understand correctly, you're going to be going live in 2021 after receiving FCA approval in the UK. Obviously, this is a very, very impressive venture with significant institutional implications. You think you can share with us a bit of your insights as to why SCB and Northern Trust decided to participate this directly in the crypto ecosystem, and how you see Zodia impacting the market in the next 12 to 24 months? And then, kind of as a side question, do you think that impact will be immediate or more incremental?
All right. So I think good question, and without taking too much time, telling you the whole story. I think back in early 2018, there was starting to get some questions in traditional finance and the bank space. And as you pointed out, I come from a very commercial bank background. I'm not even a technologist myself, and I think we started to get questioned. If I remember correctly at the time, and I think I kept that article from the bank. It says cryptocurrency can't touch this. Right? That was the phrase that was publicly, and happily shared with clients, etc. And we thought there's probably a better answer to provide a more educated answer. It's not just black and white. So we started a small group, fairly informal, as part of the bank to look at what crypto was all about. And I think we came up to, I'd say, a pretty obvious conclusion pretty quickly. And I think the senior management of the bank reached that same conclusion, which was, to be fair, very helpful, which is the fact that digital assets were here to stay. Right? It was not just a trend. It was not just interest based on Bitcoin price. It was generally something that was transformative, and therefore we need to pay attention to that space, and we need to get involved. I think the second, I would say, statement we've made, and this was the philosophy behind launching Zodia, is the fact that while everybody was trying private chains and trying blockchain as technology, but again behind a lot of safeguards, we really believe that mastering the public chain, mastering public crypto, as opposed to private tokens, is the key to make the most of the digital ecosystem. Right? It needs to be global. It needs to be worldwide, and all the benefits would only get obtained if we manage to master public chain, which is why we jumped straight into crypto as opposed to taking a more step-by-step approach. I think the third statement, or what we came to conclusion, is that a lot of our clients didn't feel comfortable getting any crypto exposure because of a lack of trust. And we can talk a little bit about, later on, the barriers to entry and what people are feeling. But obviously, speaking to institutional investors, which is really what Zodia was built for, the lack of trust is critically what was missing. And again, trust is what banks have been in the business of for decades. So we thought there was necessarily a best fit for us to come in. So based on all of this, we also realized that the first step into crypto is custody. Securing your coin is really what matters the most, and then you can build a lot of services on top, which could look more like traditional finance, or could look somewhat different, but custody was fundamentally different in the technology it uses. And by custody, again, we realized we were the only one coming from a genuine custody background, having Standard Chartered being a global custodian for decades. We realized that it's not just key management. It was key management. It was governance. It was compliance. It was financial crime. It was actual custody and asset safety. And I think view of trying to apply custody principle to crypto assets, as opposed to, leading from a technology standpoint, is something that was very appealing to Northern Trust and in particular. And this is why they decided to join the efforts and co-invest in Zodia. And as you rightly pointed out, so we're ready. We're just waiting for the registration from the FCA in the UK to be launched as a virtual asset service provider, so providing custody of crypto assets for institutional investors. So took a little bit of time here, but that's really the sort of long story of how banks got comfortable with it, why they got comfortable with it, and what's really is the approach to custody of crypto assets.
Yeah, thanks, Maxime. Good production value, as you said. Lack of trust. The lights went out behind you. I don't know if that was planned. Well, let me go ahead and turn over to you. Look, obviously, I'm a big fan about bias and big fan of what you're doing at Wisdomtree, and not just because you're one of our key investors and our closest strategic partner, although obviously that influences my view. But really, the way that Wisdomtree is looking at the digital asset space and skating toward where you think the puck is actually going is really exciting. And I think you, in particular, have been a key driver and, frankly, a visionary in Wisdomtree's foray into the digital asset space. And I mentioned, Ria's, entry onto the list, the Cointelegraph list. I wouldn't be surprised if you were on that list next year, given the things that you're working on. So you've kind of teased the market a bit with, some of Wisdomtree's plans for the coming year. But are you able to share a little bit more, give a little bit more insight into some of those initiatives with the audience here?
Sure, thanks, Patrick. So Wisdomtree is a $71 billion asset manager and financial services provider. I'd say for us, it's really two things. I mean, first is, I don't think you can really view yourself as a kind of global asset, all asset manager today without a view on crypto. I mean, it's a topic that's on every single financial news media channel today. Clearly, like the best returns year to date, or whatever period you want to look at. It's important, right? And if you're a professional investor, you want to represent your client's interests. I don't know how you can just pretend this doesn't exist anymore. I think that's largely changing. And everyone's acknowledging that it's a legitimate asset class, or at least Bitcoin, ETH, you can talk about the others, that matters for financial returns. And if you want to be a long-term asset manager for it, it's certainly an asset class that you need to understand to be able to talk to. So the first thing is, we want to provide those services to our clients. We do that today in Europe, where we compete with Meltem and CoinShares, as well as a few other firms.
I'm sorry, there is no competition. We're all in the same boat here.
Right, we're all growing the pie. I always like to say that in these things.
I don't want to use a competitor, Will. I still like you.
So we're growing the pie with Meltem and CoinShares in Europe. Hope we'd like to do that in other regions going forward too, as regulation allows. So I think that's a big part of it, just trying to talk to your clients in a way that they find constructive, helping them figure out this space because their clients are asking them about it. The second piece is, like I think a lot of people on this call, we believe that this technology is going to do more for financial services more broadly going forward. So, we talk about asset tokenization, putting real world or other financial assets into this ecosystem to be able to be used in the ways that you might like to use them. I mean, obviously this came up with GameStop, and when Robinhood went to Congress and said, oh, we want instant settlement, a lot of people, including the crypto press, immediately jumped to, oh, blockchain can do this. Yeah, and like it definitely can. And there's a lot that can be figured out with that going forward. So we're interested in being a part of that, figuring out how to deliver financial services in a more open architecture way for things that might not be digitally native. Yeah, those are our two broad initiatives that we're focused on for this.
All right, thanks, Will. So let's kind of get into the meat of the discussion here. I noted earlier that there's a sort of a threshold definitional or philosophical question about the term mainstreaming. And I really kind of want to pick up on that specifically, and sort of based on discussions that I've had with some of you previously, or public statements that you've made. I'm kind of going out on a limb, and I'm going to suggest that you all sort of view it the same way. That is, the way that you've sort of reflected your view indicates that you think that the traditional markets need to adapt to the new crypto digital reality, not the other way around. So, for example, Meltem, You previously said, you know, the big question that will emerge now is how do we migrate not the crypto space into legacy finance, but there's an opportunity here to take what's happening in the traditional finance space and drag it into the future and digitize it, disintermediate it, and distribute it in different ways using this technology. It's a great quote. And on a related note, Maxime, you recently said regulation is good, but you can't just expect people to copy paste the same tools as if crypto will just be another set of assets. So these messages, on the one hand, you know, Meltem's message directed to market participants, and on the other hand, Maxime speaking to regulators, seem very consistent in saying, look, this is new, this is better, and the old really needs to adapt to the new so that the new becomes mainstream. Am I interpreting your sentiments correctly here? And Meltem, I'll begin with you, and Maxime, I'll ask you to jump in on this as well.
Yeah, so I can just briefly expound on that. I've been doing this for 7 years now professionally, which is a very long time in this industry, which is odd to say because 7 years in most things, you know, makes you a novice at best. In 2015, I recall when we were trying to raise money for Digital Currency Group, we went to every bank on the street and they all told us Bitcoin would never be a thing. We were crazy. And then, you know, the trend by and large was let's take Bitcoin and put it into a traditional asset management wrapper and distribute it that way. I think what we've seen, and this has been clearly exacerbated by COVID and other factors in our world, including a complete sort of meltdown of, you know, institutions. And Maxime made an interesting statement where he said banks were purveyors of trust. I would argue that trust in banks and our financial institutions, as well as the monetary regimes under which we live, has been massively eroded over the last decade, really, since the great financial crisis, but also in the last year, right? We've seen, you know, a level of institutional incompetence and dysfunction, frankly, that has highlighted how little investment in digital infrastructure has been made, particularly in Western Europe and in the United States. And I think, again, it would be a fundamental mistake to take crypto and put it into a traditional banking structure. I think the opportunity here and what the market is telling us, right? What we look at CoinShares is data. We spend a lot of time and energy on looking at empirical evidence to make data-driven decisions about where to plan our strategy. And here's what we're observing. 3 things. Sentiment dictates demand, and demand dictates market structure shifts. And then we invest in the areas where we see the market moving. Sentiment has never been stronger, and sentiment isn't for Bitcoin depository receipts or Bitcoin put into an asset management wrapper necessarily. People are willing to go through a high amount of friction to get access to crypto assets. And there's a fundamental sort of shift here where instead of people accessing these things through, you know, fintech app, which at this point, all fintech apps look and feel the same, we're able to create entirely new behavioral loops. And there's an audience of consumers, including institutions, by the way, who are willing to go through a lot of friction and learning to figure out how to access these new tools, which is amazing because the concept of banking hasn't evolved since, you know, 4 millennia ago when we started building fortresses around piles of shiny rocks, i.e. gold. So what is the fortress of the digital age? Well, it's a citadel and it's called Bitcoin, right? So I think that's really important. Sentiment is changing. Demand is changing as a result. And we see demand for structured products, but also crypto native products. And again, as crypto assets increase in value, crypto asset firms themselves are becoming bigger than banks. Individuals in the crypto space are becoming institutions in their own rights, which I think is really exciting. And then the last piece is from a market structure perspective, crypto markets have never been more robust, more liquid, more accessible, and we continue to see a great deal of innovation, not just in products and services, but in market microstructure. And we see this around settlement and clearing. And the model we're going to have, hopefully in the crypto space, is not the traditional vertically integrated prime brokerage structure, but really a structure where you can trade anything, anywhere, with anyone you want, clear how you want, margin how you want, and settle where you want, which I think is also really exciting. So that's sort of my outlook. And I'm very excited about that future. Now, how long it'll take us to get there, I don't know. And there will be transition steps along the way, as obviously, you know, everyone else on the call, there are traditional financial institutions or spinouts of that working on ways to get us there. But I think at CoinShares, you know, we've really built ourselves around embracing crypto assets first and foremost, not just digital assets, but cryptocurrencies themselves, and really building a firm around the future I just described.
Wow. I knew I started with you for a reason. So you've taken that, you've shaken it up, you've dropped it right at Maxime's feet. Maxime, what are you going to do with that?
Well, so I agree with some of the statements, right? So I agree that from a technology standpoint, right, if we really look at, you know, the principles, can you copy and paste the technology? Absolutely not. And I mean, we've gone exactly through this. Why we've built a completely new tech stack, because I think I would agree, banking system is just not fit for purpose. What's interesting is you know, in what I said, and I think it was not necessarily just targeted as regulator, but I think overall, there is still a demand for, I would say, principles to be applied. The principle of asset safekeeping, the principle of, you know, making sure people don't lose their assets, the principle of market abuse. The way this is being implemented in crypto, this is what cannot be a copy and paste of what you see in the traditional world, right? And there is quite a few examples around this. So, well, first of all, nobody can operate 24/7 today in the traditional space, but that's a reality for digital assets. The concept of closing an account or terminating a relationship for crypto just simply doesn't exist, because that's always there. If you look at the payment finality, it's a concept that a lot of us as, you know, regulated financial institutions are struggling to grapple with. So there's a lot of these concepts that, as much as you would like to force your traditional understanding into it, it just simply won't work. So we need to reinvent all of that. And I think the technology, but also the mindset of questioning as to why this was done in a particular way and why can't we do it much simpler, I think that is helping a lot in building something which I would say is a lot more efficient. I think we would also be very careful that there is a reason why certain participants, certain regulations, certain market infrastructure were put in place. And that's really to ensure that, you know, the market doesn't behave badly. Ultimately, what you want is that, you know, customers' assets are safe, that customers aren't abused, the markets aren't being manipulated. So despite, you know, I would say the concept of decentralization, the concept that, you know, there is a lack of trust in our current institution, there is a reason why there is certain things that have been put in place. And these principles must continue to be put in place. And to be fair, the clients we're talking to today, and they may not be your clients which are already into crypto, the vast majority of them are not in crypto today, but they're asking us to somewhat get the crypto market as safe from this perspective to the traditional market. So yes, they would welcome regulation. Yes, they would welcome a lot better market infrastructure. I think it's far from being good. I think Ria alluded to earlier when she talks about, you know, liquidity, accessing liquidity, etc. Nothing is built yet. The way you're going to build that, I think, is going to be fundamentally different from how market structure operates today. And if you're successful, then that opens the door to all of the other traditional assets to move into the crypto space, or into the, you know, the digital asset space, because you'll have the railway, you have the regulation, which is fit for purpose for something which is generally super efficient. But I think these are mandatory steps to happen to bring the institutional investors and to bring comfort, to create that ecosystem that is therefore, you know, I would say, ready for other type of asset, not just Bitcoin and cryptos.
Yeah, so
and I think one of
go ahead, Will.
Yeah, I mean, I think that's interesting, Max. I think one of the questions is, so like KYC AML, I don't think that we're ever going to be able to get away with that from kind of this traditional financial angle, right? Where, you know, big banks have all their processes, and whether they do that well or not, I think you can discuss. But I think regulators certainly are going to look for kind of a high standard of KYC and ongoing AML monitoring, which I think crypto is actually getting a lot better at over time. You know, firms like Chainalysis and others are able to do good monitoring there. That's certainly helpful. But where I think there is going to be more, you know, changes from the way things work today is around transparency and disintermediation. So like, there's no, like, I mean, the coolest thing, and this is going back to what Meltem said about Bitcoin, it's that you don't need to trust anyone to know that it's working, right? You can read the code yourself and you can understand, oh, this is my asset, my keys, I own it. I don't need to trust that there's some bank kind of sitting in there. Like that's kind of going back to the core element of it. I mean, even with, we're one of the largest managers of gold ETPs in the world. You still need to trust that we have the gold, right? We can put it on, a spreadsheet on the website, do all sorts of things to make it as transparent as possible. But there's some level of trust in that process where there's not with Bitcoin necessarily. But I guess that gets back to a bigger theme where one of the things I think is interesting about this whole space is going to be how many layers you can disintermediate out of those processes, where you can make things more transparent to consumers on the end, where instead of just going on a slick fintech app, but still having no idea what's going on behind the scenes, that you're able to actually take a lot of those layers out, which in theory, I mean, should just make the process cheaper and more efficient for the actual users. And that's, I think, what we're all going for with this is actually a better financial services experience for people. And you can do that lots of different ways, whether it's being able to trust it more because you can see it better, cheaper, more efficient, or just kind of feeling better in what your experience is with it. So I don't know if that's really disagreeing with anything, but just a point to add on.
Well, there's some points of disagreement, but there's a lot of agreement here. So let me stay on this general theme, and Ria, let me come to you here. There's a comment that you made on an appearance on the breakdown where you mentioned the possibility that crypto native companies could one day, or could very soon, I don't want to put words in your mouth, could very soon become top tier financial institutions that contend with the traditional financial institutions of today. So, obviously, coming from someone at Fidelity, that's intriguing and maybe even controversial. So were you suggesting that these upstarts will become tier one banks and financial institutions that compete with the likes of Fidelity? Or does this really just happen through a process of M&A absorption of these crypto native companies by the large incumbents?
Yeah, sure. So I think it's going to be a combination of the two. Just as we're seeing fintech companies like Square and PayPal compete more and more with traditional financial services companies, I think crypto native companies will similarly compete with both fintechs and traditional financial institutions. There's already evidence that multiple of these companies are exploring whether they want to make an exit through public markets and become standalone giants. And, it's precisely this disruptive potential of Bitcoin and crypto that forced a firm like Fidelity to take it seriously. It's just disruptive in its ability to dramatically shift the commercial landscape and disruptive in its ability to benefit end consumers and individuals. There's also evidence that state and national regulators like the New York DFS and the OCC are really willing to create regulatory frameworks that allow these companies to offer the same services to the same users that traditional financial institutions do. So, just giving some evidence of this, last year, Kraken and Avanti were both granted the first state banking charters by the state of Wyoming. This year, Anchorage became the first crypto company to get a federal charter from the OCC. So companies that are overseen by these regulators have to operate and comply with their strict regulations, and that puts them on a more level playing ground with incumbents. And we can't ignore that. We can't say that they don't have the potential to grow to the same size as traditional financial institutions as the industry matures. But at this point, as Meltem said earlier, we think it's really net positive to have more regulated players in the market because it adds legitimacy for all of us involved, and there's really strength in numbers at this stage of the industry's maturation. And I also think, I think later on in the day, there will be more discussion of DeFi and maybe DAOs and just more decentralized organizations. And I think in the future, this definition of institution that we believe today will really be challenged and evolve as some of the institutions that are being built on these public blockchain networks become more decentralized and community owned and really attract more users and volume. And kind of tying it back to the discussion that you guys were having just a second ago, what I think is really powerful about this industry is that there's optionality. So you could, go to the most centralized player that kind of abstracts all the risk and complexity away from you, that might be a little bit more expensive, but you also have the option of taking the time to ramp up, understand how the infrastructure works, and use a more decentralized alternative. And I think it's really important for us to make sure that that optionality exists.
Hey, Patrick, can I just jump in? We are running out of time and we have a few questions stacked up. So maybe you can just look through the questions and choose one that is best to answer right now. There's some that are really relevant to DeFi, so we could maybe postpone some of them to later. But maybe
yeah, I sure can. Just really quickly though, Howard, just as we kind of wrap up that topic, it's kind of an interesting thing because what I've heard, and I would conclude from everything that I've heard, that the winners, in the new mainstream would be the ones, those entities that have sort of embraced the paradigmatic shifts earliest, right? And really, been first movers in that. Just, yesterday or today, I can't recall, see this report come out from JP Morgan where they say, hey, the big banks, we see you guys, we see you upstarts, it's time for us to, I think they even use the word fight back. It was like the Empire Strikes Back. Does that stand in the way of, Meltem, the way that you were looking at this? This is going to be a new paradigm, or I mean, do they just come in and say, no, we're going back to the old school?
Look, here's the thing that's fundamentally different, and that I think I've only really appreciated since I got into crypto. Banks operate not on the basis of creating value. They operate on the basis of having a direct pipe to the Fed and having certain rights granted to them, particularly SIFIs. The consumer banking experience today is broken. The institutional banking experience today is broken. It does not work for the majority of people. So I do think that as things become more digital, and this is not just a crypto thing, there's a generational shift, there's a huge wealth transfer happening. There are fundamental changes in our world in the macro sense that are driving this shift. But traditional financial institutions have operated not on trust that they have earned and preserved. It's specific rights they have been given that have been denied to everyone else. And in the crypto space, we've been fighting for equal treatment in those rights. And Max, I would disagree. I think there are a number of firms in our space who have earned that right, who have operated for a long period of time without any incidents or without abusing consumer trust. I think the expectations are changing. And at the end of the day, what people need is driving what people choose to use. And I do think that banks have a tremendous challenge ahead of them. They can try to buy fintechs, but Coinbase going at a $100 billion valuation, no one can afford to buy Coinbase. The day it lists publicly, it will be the 6th largest financial institution in the United States of America by market cap, with 1/10 of the assets of one of its top 10 peers. And this is a fundamental shift. The market is pricing this in. And I do think at the end of the day, legacy financial institutions have a lot of hurdles to overcome. The biggest one is a cultural hurdle and a mindset hurdle. At the end of the day, right, you cannot come from a place of being dismissive of new technology. And I think a lot of financial institutions have historically been dismissive, continue to be dismissive, and view this as a toy or a distraction. And so I look forward to seeing more crypto native institutions become leading financial institutions and to really put the heat on these firms who for so long have enjoyed a near monopoly on transactions, on custody, and on all of these other products and services, and have delivered just a completely broken, poor experience to the end users. So I think they're up for big challenges, but the biggest one is a cultural challenge and a mindset challenge.
Yeah, I'm
Bonny,
not.
Patrick.
Tell us what you really think there.
I was pressing the button, mute off mute, mute off mute, mute off mute, right? Itching to provide some color, and I don't necessarily fundamentally disagree with what Meltem said. I think I would just be a little careful though, and maybe we need a lot more time than what was allocated today. I think there's probably a difference between various countries when it comes to financial infrastructure. I mean, I lived in Asia for 10 years, and I can tell you in Singapore, you do payments 24/7, using banks, using the clearing system for free. And that's a really good customer experience, right? And that's got nothing to do with crypto, nothing to do with blockchain. So I'm not too sure this is necessarily, sort of everything being equal sort of everywhere. I do think though that there is one, on trust, a lot of it is around perception. Right? It's not necessarily the actual trust, but a lot of it is around perception. And I think this is by far the biggest barrier now to larger institutional bar clients getting into crypto. Two, I do think that you will see very, very soon a bifurcation on the crypto side. You have what wants to stay ahead of the curve, unregulated, sort of free of, regulation and large banks, etc. And I think that would still be appealing for part of the market, right? There's absolutely no doubt about that. And then you'll have I would say another side of crypto, which will try to, as I mentioned earlier, can't afford to be too far from traditional finance, right? Because you can't dissociate crypto from FX, for bonds from equities, because these are assets managed by the same firms. And these clients, which are the whales of today, are essentially needing to have services that are, and regulation that aren't too far from what they are, approved to do today by regulator, by shareholders, and approved by their clients as well. So I think we'll probably see that. And there is, I think, space for both. And I think what Meltem said is absolutely right. You'll see new financial institutions being created. And you'll probably see a tipping point where you have traditional financial institution that either will hop onto the digital asset train and the one that won't. And I agree that then we'll probably see some friction on who does and who doesn't. And you better not miss off that particular train, because it's going to be very hard to run after it. So I think there's space for two here.
Hey,
Yeah,
Pat,
well, convenience is king. Howard, do you want me to wrap it up now, or do you want me to hit
I
more?
think we do, because we're falling even further behind. I mean, I love the discussion, and I think it's great to have fireworks this early in the morning. It's 7 o'clock in California, or 8 o'clock in California, and I'm now fully awake. But I think we have to move on. So maybe you want to just wrap it up, Patrick?
Yeah. So look, I mean, thank you, everyone. This has been a very, I think, as Howard said, a lively discussion. Hopefully, a good way to kick off this great event. I apologize to the folks in the audience. There were a couple of questions here about KYC coming to and AML coming to DeFi. Happy to have that conversation with you offline with my Securrency hat squarely on, and another one about customer trust. But apologies for not getting to that. But many thanks again, Howard, Nick, and all of the panelists for for this opportunity to be here with you guys. And with that, Howard, I'll hand it back over to you.